There is a Wall Street axiom called the 5-day rule. It holds that if the S&P 500 goes up in the first 5 trading days of the year, it will also end the year higher. Now that may sound like some old wives' tale, but listen to this. So-called 5-day rule actually has a pretty remarkable 80% win rate. In other words, 80% of the time, the S&P 500 goes up the first 5 days of January, we end the year higher. That's pretty good. It's not 100%, but it's still pretty good. Do note, though, it has failed twice in just the past 7 years, 2015 and 2018. And of course, just by mentioning it, we jinxed it. Let's bring in now Lee Baker, owner and president of Apex Financial. Lee, it's good to have you back on the program. Happy New Year as well. I mean, these things, it's history. Some people care, some people don't. Do you, or is it just some kind of neat little historical thing we can pay attention to for fun?
It's just a neat thing we can pay attention to for fun. My family history, There's a lot of old wives' tales that abound, and I would put this right there along with them. It's something interesting to talk about. An 80% win rate is good, but I think it's really just something interesting to talk about.
Yeah, it's like if the dog comes in on a Wednesday before it's raining, it's going to snow on Friday. But still, there is some historical background to it. I think it goes more to the idea, Lee, that there is momentum, right? That you sort of start the year off with some optimism. We've seen that this year, at least in energy, oil and gas, industrials, not so much in tech. What do you make so far of how we've begun the year?
So I think the year is off to a good start, clearly. I think the momentum is there for this to be a positive year. Now, again, you want to talk about getting far ahead. Do I think we're going to be sitting here in December of 2022 looking back on 20+% positive in the markets? No, I do not. I just don't see that. But I do think the momentum is there for a positive year in the markets and the economy in general. There's some tail risk, if you will, some things that I think could knock us off of our skis. But overall, I think we're set up for another positive year.
Yeah, is there any particular part of the market you like? Are you a believer or a buyer in this rotation that we have seen the last few trading days, Lee, out of tech into like Chevron?
Absolutely a believer in the rotation into value. You've got this rotation, again, Chevron, those sorts of things. We still have that pent-up demand issue where the pricing pressures, the supply chain disruption, that's going to really come to bear in these industrial sectors with some of the names you've got showing here. Now, that having been said, I am not calling for some huge drop-off in the likes of Apple and Microsoft, but I think things are very positive for some of the names that you're flashing on the screen here. Absolutely.
Yeah, you wonder how much this rate shock, rate rise, rate move is going to take. What we've learned about the bond market, Lee, in the last few years is that it doesn't move a lot, but when it does, it tends to move quickly in just a couple of days and then just kind of sit there almost like a super tanker. When it doesn't move much, but when it does, it leaves a lot in its wake. You think the 10-year may be done moving, or is it going to go even higher?
I think we're probably done moving, and we've entered one of those scenarios you described where it's just kind of sitting there like a super tanker for a while. The information that this is based on, it's kind of out there. I think back to probably about a year and a half or so I was on with you, and I said, hey, listen, normal metrics don't matter. I think 2022 is the year that we get back to normal metrics actually mattering as Omicron and all those other variants, hopefully, fade into the background. And this is the year that I think we really do get to the other side of COVID, if you will.